Good day, ladies and gentlemen. Hope you're all having a fantastic day. See, when I first started learning ICT concepts, I was overwhelmed, and I'm pretty sure everybody has had that experience. There's a lot of content, it's hard to know where to start, but the fact is, once it starts getting clear, it provides an unprecedented precision that makes trading a whole lot less of a headache. You see, ICT doesn't give you a checklist. He actually teaches you how these markets book by giving you landmarks and things to look out for, which can help you find your way in price. These act as tools you will use to build your own model. Think of this video as me showing you how to make a platform to build these structures on. When I started learning, it was my biggest issue because I didn't understand where to put every bit of information that I found. And I hope this video can give you the clarity you want, so please stick with me. I promise you will not regret this. Okay, so everything you ever learn from ICT can be categorized into two parts, which are narrative and entry pattern. He teaches a lot of things, and I can't get into all of it, so I'll use my own model, how I built it, to show the logic behind narrative and entry pattern. Entry pattern is pretty simple. I learned it from the ICT Mentorship 2022, I think the episode 2 and 3. It highlights what the entry pattern is, but that's not the issue. Narrative, it's where it gets slightly more complicated. Think of narrative as the story these candles are telling. You look at this piece of price action, and if you understand the specific tools used to orient yourself properly in price, you can know exactly what's happening, and you can know when you don't know what's happening, which has a great amount of value. So if narrative is the story these candles are telling, then you building your model is just identifying parts of this story you're more gravitated towards and getting involved in there. You can't get involved in every part of the market, just parts that make sense to you. Over time, you can build more experience and add other parts to it, but you need a starting point. That's how I understood it. If you want to think about narrative, there's three questions you ask yourself. Where am I in price? Where is it likely to go? And what does where I am tell me about where it's likely to go? So we know the market does only two things. Gravitates towards liquidity, which can be found below old lows and highs. This was price taking out this high was price taking buy side liquidity from there. This was price taking buy side liquidity from here. It's the same logic. After price takes liquidity, it can go take further liquidity, or it can reverse by doing a market structure shift. If you're seeing a series of break of structure on any time frame, then price is perhaps gravitating towards another liquidity in the past, as we can see here. Price took out that high and took out this one, and then we had our market structure shift. Sold out for a little while, sold off for a little while, and took sell side below this low. So we're going to look at this fractal, this piece of price action, using these tools. ICT, oh my goodness, he teaches a lot of things, but I'm only going to use fair value gaps, order blocks, breaker blocks, and volume imbalances. If you don't know what these are, I think the best way to learn is to watch me use them in real time. I don't have to provide definitions for them. It's going to be a long video. So we're going to look at this price action. This is today's price action. It's currently the 20th of March 2023, and I want to share something very specific on Friday. So I'll cut off these two candles right here. Let's get into this. Okay, so as you can see, I've cut off the two candles, and this is the daily time frame, by the way. I have to point out that you do not need to know the daily bias in order to take trades. My model does not depend on daily bias, but I want to show how having the daily time frame on your side can help you break down the charts from the higher time frame all the way to the lower time frame to find the parts of the market you can participate in. So let's just start. Now this is when I have clarity in the market. As you can see, I cut off those two candles. I expected to see higher prices for price to take out this high, and that's what we had. That's the candles I cut off. And what better way to explain why this is clear than to show a bit of a time where it's a bit ambiguous. So I'm gonna cut some candles off. Yeah, say somewhere here to show a time when I have no idea what's happening in the market. First tool, this down close candle here is an order block. Now look at this price swing and how we came down, came up, and then came back down. Look at these two highs. These are relatively equal highs, right? Price poked a little bit into it, just a little bit, and sold off. But if I came into the market on this day, for example, well, this day, because that's the first time we came into the order block. Let me identify the order block properly. I can use the wick, but because we've already passed the wick, I'll use the bodies. The body, right? Let's name it let's name it bullish order block, and then we can get them from there. So price hit the order block. I'd be expecting higher prices. I'd be expecting this fair value gap to fill. It holds price pretty nicely. So does this small one in here, and then we have this big bearish candle. I would not be expecting this, but even after this happens and price leaves this fair value gap here, I drew that in hindsight, leaves this fair value gap, I'd be expecting this fair value gap to fill, and then this happens. We hit this here. On this day, price fails to close above the fair value gap, and now I'm confused. Are we bullish or does price want to continue this bearish run? One way I'd decide on how to position myself better in this setup is to look at this bullish order block, find the midpoint of that, and see if price closes below it, as we saw somewhere here. Okay, so on this day we closed below the bullish order block, and now I can be pretty confident that if this sell move has to continue, that price can at least come below the closing price of this bearish order block or the opening price of this bullish candle, and perhaps even come down here to take sell side liquidity. Sell side. So you see, now I have a bit of clarity in the market. I can disregard this order block for now and trust price to go lower to at least this level. And we have a big candle, comes back up in here, and eventually, you know what happened. Hindsight. Okay, so now that I've cleared that out of the way, I want to get actually into Friday's price action, last Friday's price action, and what I mean when I say that was clarity. So this is still the daily time frame, by the way. We're gonna get from the daily time frame to the 15-minute time frame, establish the narrative, and find trades on the 1-minute time frame. Just bear with me. So after taking sell side 3 days, Wednesday, Thursday, Friday, which was 2 weeks ago, took out this high. That's a market structure shift. We took liquidity, market structure shift, and we've left a fair value gap down here. And then we had this, and then price left this volume imbalance. Now that's a volume imbalance, and this is how it looks like. You can see the wicks overlapping, and there's no what's it called, there's no bodies like filling in that space right there. So that's a volume imbalance. Let me just change it up a little bit. So that's a volume imbalance. Now that's somewhere price can be sensitive to, and I'm watching to see how price behaves when it comes in here. Because if we're bullish and price comes back down in here, I can look for signs that price is actually going to expand further to take the buy side liquidity up here. And remember, buy side liquidity above old highs, sell side liquidity below old lows. If we're actually bullish, then I have to see, there's something that I can see to orient me towards price being, bullish and pushing further for buy side relative to this level. So this is Monday, and like I said, we're going into Friday's price action. So let's just go. Tuesday, Wednesday, we come in here on Wednesday, we don't close below it, and on Thursday we see this. Okay, now this is beautiful because now we have a high up here, which means the closest buy side liquidity is up here. This is where the market is drawn towards. This acts like a magnet to pull price towards it. So now let's go into the 15-minute time frame. So I'm breaking down the narrative because I have something on the daily chart providing more than bias. It's providing clarity. 15-minute time frame. We have the volume imbalance right there, and this is Thursday's price action. You can see price first came into the volume imbalance on Wednesday. It overshot it a little bit, but I just don't want to see price close below it on the daily time frame. So on the 15-minute time frame, it overshot it a little bit, was held in there. On Thursday, we had price come up, make a Judah swing, just like came down, took the sell side below these lows, still inside the volume imbalance, and then we had a rally. So price being bullish on Thursday, that's something I like to see. Now let's go to Friday's price action. You see, the reason why I said I can trade without daily bias is I also trade the London session. It's actually my favorite time to trade. You see, in the London session, we can have three things. Price can set the stage if we're bullish, like actually start rallying higher, or it can make a Judah swing where we have like price drop, take some liquidity, and then rally in the New York session. Which means that in the London session, I really don't have to, stress too much about bias. And the way I trade the London session, I've already showed in the on the YouTube channel in my other video, which is actually my best performing video. Thanks for the support, guys. Yeah, but basically that's something I don't have to care much about. On this day, I didn't get any trades in the London session, but if I had to trade anything, this would be it. You see how price took out this high made in the Asian session and right into the open of the London session? We took out that high. That's a liquidity grab. Did a market structure shift. I'm looking inside this fair value gap. And if you don't know what the fair value gap pattern is, 3 candles, 1, 2, 3. The space between them, that's the fair value gap. You can find it anywhere. That's a fair value gap. 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 It's pretty easy to spot. So I'm waiting for price to come back in here and then I can sell, but we never had that. So it just sold off and I couldn't participate. You see, in here, I'm not selling immediately. I'm going into the 1 minute time frame. I'm looking for the same pattern. Market structure shift, fair value gap. What that is it provides an extra layer of protection. And I'm looking for this at a specific time. You bring all of that together and then you have a model that protects you from taking so many unnecessary losses. So in the London session, we have this sell-off, and from 5:30 to 6:45, we're having a consolidation. I like this. We left this low here. We have a consolidation. Remember, everything we've been talking about from the very beginning sets the stage for a bullish market in New York session. Seeing this consolidation here, my eye is drawn immediately to this fair value gap down here. Let me just even bring it lower because this one already came a little bit down there. So I'm looking at this fair value gap here and I'm waiting for price to get in there. You see, in the past, the moment price gets in there, I'm taking a buy trade on the lower time frame. Right now I do something a little more protective, a little more conservative. I wait for a 15-minute market structure shift instead. This is what we have. So price comes in there. Remember, it only has to close inside of it, which means we have the bulk of the volume remaining inside this fair value gap. When price comes in here, you have every right to go to the lower time frame and get involved in a trade. Personally, I like to wait. I don't have to catch the move from its inception. You see, because I'm still learning and warming up to trusting most of these ideas, I am being as conservative as possible and getting the data, missing out on trades, getting more data, taking only trades that line perfectly with my model, and eventually I'll expand from there. And I think that's the best way to look at it. Price gets in this fair value gap. Our market structure shift happens here, by the way. And we want a market structure shift with displacement right there. Price takes out that high, market structure shift. There's two highs here. That qualifies this as a market structure shift as well. Regardless, we have a market structure shift. Price leaves the fair value gap, and I'm looking at the time. The time here is 9:15. I can trade. Price, I go in the 1 minute time frame. So now time for the entry. This is the 1 minute fair value gap, and I'm ready to get involved in a buy trade if my model gets presented. We hit it down here. I want to see a market structure shift, which is price taking out that high, and it doesn't. Well, it takes it out, but doesn't give a displacement. Comes deeper down in here, even deeper down. So all the while I'm watching, like I said, price does not have to close inside it on the lower time frame. It can overshoot it in the lower time frame. I just want to see that on the 15-minute time frame we didn't close below the fair value gap. So I'm showing you how to use these PD arrays. You see, if someone trades with order blocks, these two down close candles, those qualify as a bullish order block. But you can look at the market through the lens of one idea and expand from there. That's how you use these tools. So 1 minute time frame, usual stuff. Market structure shift happens here. We leave a fair value gap. Now in hindsight, I know this fair value gap was pretty big, and we have two fair value gaps. ICT always recommends going for this one, and my stop loss is below this down close candle, which is another bullish order block. So you see, I'm managing the stops using a logic. Why didn't I put my stop here or there? Even in hindsight, I know I still had to put the stop loss down here, because this is a bullish order block. There's a fair value gap here. Price can definitely come all the way down 1 pip above the fair value gap, and that's how much I should allow. So you see, when you trade these concepts, you're working with a specific logic. Now I divided this fair value gap in half, and then you think about the profit target. So you're thinking about targets, you're thinking about where the market is likely to, do a thing once it gets there. The first thing to look out for is rejection blocks. The closing price of this up close candle, that's a rejection block. I wouldn't get my 3-hour over there. I'd only get a 2.74. I usually like to look for a 3-hour. 1 minute time frame, price fills in the order right here, then expands and hits the profit target. Now if I'm being honest, I wouldn't have closed here. I wouldn't. I'd be holding for a 3-hour, and then this would happen to me. Move my stop to break even, and this would happen. Price would hit my stop loss at a break even after giving a 2.74 RRR. Honest to God. So narrative on the 15-minute time frame, entry on the 1 minute time frame, and that's how you do it. You want to do narrative on the 15-minute time frame and enter on the 15-minute time frame, you can. I just like having an extra layer of protection. So I'm using time, I'm using price, I'm breaking down the 15-minute time frame to the 1 minute time frame. But these are definitely trades that are, it's possible to get involved in. So this is how it works, folks. When you're thinking about learning IC2 concepts, it's narrative and entry. And narrative is all you need. Like right now, the price is taking all the liquidity from here. Say you got involved in the 15-minute time frame right here, long position here. You can just get out somewhere here, get your 3R. I don't know how far it even went after this. It rallied and fell short of the buy side liquidity here. So when you come the next day, there's no reason to expect anything else but a further expansion towards buy side. Unless of course you see something else change on the daily time frame. And again, you don't need the daily time frame every single day to trade. Everyday bias is, well, it's not something you can do or you even have to do. And then today we had this. Oh, still in replay mode, right? See, nice expansion today. I couldn't find any part to be involved in. I'll probably go back after this recording because I wanted to see some liquidity taken, right? And we only took it in London. Took liquidity from these lows, relative equal lows. This chart looks disgusting. Let me clean up a little bit. Alright, 15-minute chart. Relative equal lows down here in London. This was a buy that I missed. Isn't it funny? Like right in here, my 1 minute strategy gave a setup in here. I missed it. Couldn't participate, but that's fine. And then price did a rally here, 4:30, came down in there at 5:15, and I do not care because I don't trade after 5:15 New York time. Then it rallied and eventually took out the buy side. It engineered from last night. Took out the high of the day, and I kept going. So this is how to think about these charts. It's always the same ideas, no matter how anybody trades, it's the same idea. Knowing where the market is going, know where you are relative to that, using the higher time frame to guide and orient yourself properly, and then finding a target. It gets deeper than that, but I think this is an excellent place to start. If you've made it to the end of the video, thank you so much for watching. Please like and subscribe if you found any value in this video, and thanks for watching. Catch you in the next one.